You're listening to Business Eye on Dublin South FM.
Hello, and it's Friday again. Heard yesterday's 100 days to Christmas, Joe. 100 days to Christmas today. Joe, 100 days. Are you ready?
100 days, yes. Well, I did hear that we need to get in those shopping presents for our kids, and Santa's going to have to work extra early this year as well, Simon. And the reason being, a container coming out of China at the moment, where it used to be 2,000 for a 40-foot container, is now up to 20,000. And in that, a lot of places are kind of holding off, or those supplies won't be coming over at all. And also, I believe that certain stores are gearing up now because it could be a tight Christmas for people if those presents don't come in as well. So, but 100 days, I haven't even got through Halloween yet. I seen someone on Facebook had, believe it or not, selection boxes in their shopping trolley. There you go.
There you go. Deal with Halloween first and let's worry about Christmas after that.
Do you know, if you were to ask me, Simon, what would be my Christmas wish? And my Christmas wish would be for Mr. Coveney and his colleague Leo to jump on their little bicycles and cycle off into Never Never Land.
You mean the true leaders, Leo and Simon, the true leaders?
The breach of trust leaders. The breach of trust leaders. Yes, they would be.
Yeah.
But that's it.
But they survived again. They've survived again, Joe. They're doing something right.
I have to scratch my head on that. But look, let's go positive here. Let's think about the future. Our guest today is Louis O'Connor, a strategic metal strategist. Louis has been traveling the world for many, many years. He's lived in Germany, he lived in America, he's lived in Panama, and he's now back in Ireland here, just helping people make the right investment. And when I say the right investment, you know, we're all worried about the euro and we're worried about the dollar, but I've always believed that metal is the way to go. If you're looking at from silver to gold or other metals, which I'm learning actually is more profitable than silver and gold as well.
So the world of metals, Louis, it's fascinating. I spent 10 years in Australia, and it was, the mining resource capital of definitely the Southern Hemisphere. But I haven't, since being back in Ireland 5 years, I haven't really spoken to anybody about metals. So
I've just returned from 15 years in Latin America, and mostly it was in Central America, in Panama, Colombia. And just because of its close proximity to the US, I was working with a lot of North Americans, Canadians who were coming down to Central America, for retirement and second properties and investments and stuff. So I suppose that's what first sparked my interest. And I suppose the reason was North Americans in general, they've had more wealth, if you will, sort of longer than certainly people in Ireland anyway, maybe not the UK or other parts of Europe, but they're sort of, I don't want to say they're more sophisticated investors, but they have had wealth and they have been invested probably for longer than we have. I mean, in Ireland, most people haven't had wealth at all, except for in the last 20, 25 years. So, when people accumulate wealth, they want to hold on to it and they look for different asset classes to diversify, their portfolio. And gold and silver has always been, there's $34 trillion in the market cap in gold. Now, to be honest with you, why? I don't know. I'm not a big gold fan. I mean, we do offer precious metals, gold and silver as well. But to me, gold is just a hedge against inflation. It's a store of wealth. It doesn't have an intrinsic value. Sure enough, it only goes up in value when there's a crisis or a perceived crisis. It's just recently last year gone up because of COVID. Why should gold go up in value because of a crisis or a perceived crisis? So it doesn't have an intrinsic value. It just have a perceived value. So the metals that I work with, up till about 10 years ago, you couldn't buy them as a private investor. Partner is in Germany. They're a metals trader, have been since 1999. And these metals are, they're used in all modern technology. They have an intrinsic value. There's a very high demand for them. There's an increasing demand. And as you guys were talking a little bit about before we started, the supply chain is subject to disruption.
Yeah.
It has been disrupted, obviously, because of COVID, but primarily it gets disrupted because China is the dominant market leader in rare earth elements, the ones I work with, which is more than 85% of them are produced in China. And more importantly, the Chinese have the refining technology. They've been doing it a lot longer. Just to give you an example, there's one rare earth mine, if you will, working in all of North America. And even though they mine, the metals there, they still send them to China to be refined. So that'll just tell you why China is the dominant market leader. So, I mean, look, I'll tell you what is my opinion and what is fact. And the fact is, once people do a bit of due diligence, is you can profit from owning these metals. Now, it's not something, a get rich quick scheme. If you're going to invest in metals, you should be willing to stay in for what we would call more of a long-term play, minimum 1 year, more than likely 3 or 5 years, so you can see some decent returns.
Simon, you've been part of brand financing. What's your thoughts on the metal industry compared to, people looking at countries overall?
The metal industry, because of the factors Louis said, prices are high, and for all those factors perceived, it's funny, Larry Summers, the former US Treasury Secretary, was being interviewed yesterday, and they were saying, is this current high growing interest rate period a blip? And his view is it's not. We're probably in this now for quite a while because of all those factors that Louis mentioned. We've had constraints on supply. The wealthy haven't been spending, so there's going to be a bit of boom in spending, but there's going to be a supply shortage. And so he thinks we could be in for years of inflation, which is going to then feed into high prices. And obviously people are going to be looking at metals. So I think some of those laptop metals, I used to work for Dell and Xilinx in the semiconductors, palladium and nickel and all those tantalum, all those kind of, and also because of the Chinese near monopoly on some of the production, I can only see the prices I can't see them being low. What do you think, Louis?
Until about 2010, the ones you mentioned, tantalum and palladium and stuff, they are sort of used in modern technology. But the rare earth elements that we work with, there's 17 of them, and only 10 of them are really considered rare that we sort of offer as an investment play. I suppose the bottom line with them is, like, historically, let's say in the last 5 years, the return on investment, if you will, has been about between sort of 15 and 18% per year, which I think is very good. If you're looking at them just as a sort of a hedge against inflation, just as a store of wealth. Just what you were talking about there is very, very interesting because, like, for example, some of our metals this year have gone up 80%. I mean, and to be honest with you, I don't like the fact that they've gone up so much because, could be in for a bit of a fall.
Louis, the question as well, as Simon said there, with inflation going up and everything pushing the prices, then suits the metal industry as well because then it works out more cost effective to dig this stuff out of the ground.
China is the dominant market leader in rare earth elements. And the reason they are is because about a generation ago, they decided they would be. Now, what's interesting about rare earths is they're not all that rare. They're called rare earths, when they were first maybe discovered because they hadn't been. But you can actually find them pretty much anywhere. You could probably find them in Ireland and England, but you won't find them anywhere in abundance. And they're always a byproduct. Like, for example, gallium, which is in all modern technology, is a byproduct of mining for aluminum. You'll only source gallium through mining and aluminum. And the key thing is being able to refine them to make them relevant, to make them malleable. And again, 80 to 85% of production is in China. There's a few of the metals we offer there's 3 or 4 of them that recently the European Union and the US have listed as critical raw materials to the economy, so they're of immense economic importance. And they know they're just about 20, 25 years behind China. I mean, they could get there, but as you pointed out, it'll be more expensive because they will do it more sustainably than China. So they are going to get more expensive to mine and to refine. Just purely from an investment point of view, I would say there'd be a very good play for the next 5 to 10 years, maybe 15 years. But in about 15 to 20 years, the US, the EU, other developing nations know they can't. They have to discontinue this reliance upon China, and they will do it. But in the meantime, The metals are going up, anywhere between 20-25% a year, and they will do that for the next 5 to 10 years. So it's a good play for the near future.
Like if someone buys metal, get it and stick it at home in a drawer in your bedroom, or...
Excellent question. So my partner, and this is the most important player in the whole transaction, is a company called Tradium, based out of Frankfurt in Germany, and they are metals traders. What that means is, for example, gold. I'm in Ireland now. I'm actually, in Limerick at the moment. You guys are in Dublin. You could probably go and buy gold now in the next 5 minutes, and you could buy it. You could probably physically go somewhere and buy it over the counter. You can get online. You can buy it and store it in Switzerland or Singapore or Australia, wherever you want it. It's much easier to buy and sell gold. Now, with the metals, if you're not buying them from an industry recognized metals trader, you don't have an exit. So Tradium, you buy them from them, you get a certificate, you physically own them, you store them in a vault, but it's probably more important, probably better you keep them sort of in their custody. And what I mean by that is they also have a storage facility, and it's important to keep it in its original packaging with analysis report, because if you take it from the vault, say, and bring it to Dublin and store it in Dublin, well, it's gone out of the supply chain. And in order for you to get it back in the supply chain, you might need it analyzed again. If, nobody's going to buy it unless it's in its original packaging. So it's a very, very good point. And that's one of the reasons I started to do it, is this German company is the only metals trader in the world that offer in private investors the opportunity to do this. So, and they also provide the exit. So let's say you own the metals for 5 years and then you want to exit. They guarantee to sell them to industry for you, and they guarantee to do it within 3 to 4 working days.
So look, do you know where my head always goes? When there's something a bit mysterious, not mainstream, and this to me would not be mainstream to the average person, my cynic head says, am I going to meet up with a rip-off merchant? How do I know that not the company you mentioned, but maybe another company masquerading like that doesn't try and con me? Because it's also unspoken about, and no, it's not like going to High Street Bank. How did you learn to protect yourself, and how would other people stop themselves from being ripped off?
Comes down to due diligence. You must do your due diligence. Yeah. And Simon, you're absolutely correct. This is not mainstream. It's sort of an alternative investment. Doesn't mean you can't profit from it. And funny enough, it's a bit of a niche market as well. However, depending on where you are in the world and how much you're investing, like our minimum investment is $10,000 or €10,000. Most clients are coming in for about 40, 50,000. Some are coming higher. But there's about 3 or 4 ways you can do your due diligence. One is you can get on a plane to Frankfurt, and we'll take you to the vault and the office, and you can touch it and see it and feel it, that it's real. A second one is, a lot of my clients are North American. I'm now sort of doing some European business as well. But another way you could do it is, let's say you're an Irish citizen or a US citizen. You can contact the Irish embassy in Germany and ask them for a list of English speaking attorneys in the Frankfurt area. And for about 200, 250 euro, they'll do the due diligence for you. We'll give you what we call the legal imprint of the company, the VAT number, the company number, the tax number, and you can get a full sort of report done for, less than 200 euro. In other ways, you could go locally to an attorney in Ireland or the UK, and they'll probably just charge you a little bit more than if you went to a German one. They'll probably do the same thing. So there's a number of ways to do it, but key thing is, due diligence is not a word to be bandied about. I mean, it must be actively done. It's amazing how, to me, when you hear of people losing money in investments and stuff, if you look close enough, I always find they didn't do due diligence. They got carried away. FOMO, possibly, fear of missing out. One of their friends, buddies, told them about it. But invariably, you'll see they didn't do proper due diligence. So sorry, I was going to say to cut a long answer short, I didn't. But due diligence.
I agree.
I see there's a huge uptake now in crypto, and a lot of people are investing in crypto coin. And for something for myself, even though I think nearly everyone has invested in it, how stable is it? And does it go back to, as we like to touchy and feel instead of digital?
I have one burning question for you. How, and without being confidential at all, but how do you get clients? How do people find out about you?
A number of different ways. Primarily, the first thing is we have a website up and running. The office and the vault is in Germany. A number of different. The last 15 years, the work and business I've been doing, I've a good few connections in the offshore area and space, if you will. People like International Living, Sovereign Society, Live and Invest Overseas, Freedom Fest in the USA, Anarchapulco in Mexico. So there's a good few people out there that are aware. There's a lot of people that have woken up to the fact that the best ways I ever heard it described is that few civil servants in government sitting around thinking up ways of how they can tax us more. They do that. It's a legitimate sort of thing they do. Well, it's just as legitimate for us as citizens to be thinking of ways of tax avoidance. Now, I'm not saying don't do anything illegal or anything, but I'm just saying it's as a legitimate endeavor as it is for the government to be thinking of ways. My stuff is a sort of an offshore thing for many, many people. And again, it's not like hide and seek, it's show and tell. It's just if you're lucky enough to have some wealth and you want to protect yourself, it's a good idea to diversify your portfolio in different currencies, in different geographic regions as well.
Is it a short-term or is it a long-term investment?
It's a long-term. We recommend minimum 1 year, and there's one reason for that is if you hold the metals for at least a year, so a year or longer. As Simon touched on earlier, it's not mainstream, it's a bit of a niche. And this is, I suppose, this investment, it's not top of people's lists. I mean, if somebody, say, has a portfolio, they probably are thinking, I'm not going to put more than 5% in any one asset class. And we wouldn't be, the first, second, or third choice because they'll want to put their money into property, stock market, bonds, maybe precious metals first. And we're more of the asset class where it's a hedge against inflation. So the people that have money, they have asset classes that they expect to make money in. And with inflation in Europe right now and zero negative interest with the bank, if you just keep your money in the bank, you're losing about 5% a year. With metals, at least you sort of got that hedge.
I think it's an alternative, definitely. The interest rates in banks have gone. Do you know how much money is sitting in the banks here that isn't being tapped into being invested? It's 35 million or billion.
Yeah.
35 million, which is sitting in bank accounts here, which people aren't gaining any interest in. They're just having it there. The way the banks now are charging now, banks are now charging just to hold your money in it. That's it. They're just a safety deposit box with a fee, nothing else.
Yeah.
And I think that it's time that, a lot of people who crypto went, I think the metal end of it is something to look at.
Joe, it's a physical asset. People own it. You physically own it. It's tangible. They're in demand. The funny thing about it is most people don't know you can do this safely and securely, as Simon touched on earlier. It's only in the last sort of 10 years you can. And there's probably, from time to time, has been some shysters out there pretending to do it, but don't actually do it. So you have to do your due diligence, You have to, for example, Tradium, the company that I partner with, they have a quality assurance, ISO 9001 quality assurance certificate consistently since 2003 for their metals. The vault is open since 2010. So these are things you can, you need to validate. You need to do your due diligence on this stuff, And just touching on crypto, I'm also, I've sort of been in crypto as well since about 2017. And I think there's over 3,000, currencies out there now. So that's problematic. Just talking, say, about Bitcoin, the original, Bitcoin has never been compromised. Never been compromised. Bitcoin exchanges have, but that's just like a bank, So it's not, it is volatile, but it's the future for sure. But I just don't think they have the technology yet. Bitcoin might not be the one. There might be another one about to come that will be the one. But Bitcoin and cryptocurrency has the potential to take these middlemen out of it, bankers in particular, because it can be just back person-to-person transactions. if you remember, Joe, as well, for example, if you can think back, it used to be just gold, right? Works in gold, right? And can you imagine back in the day when we were going from gold to paper money? Like somebody said to you, okay, from here on in, money's going to be paper. You would have laughed and you would have said, no, if it's not gold, And we haven't had a disruption to the financial system like that in a long time. The largest or the most recent disruption to money and finance was when credit cards were created in the 60s or the 50s, late 50s and the 60s. So we haven't had a disruption in a long time. And crypto is the disruption. And look, people go as well, digital money, that's never going to work. Well, 98% of our transactions are digital already. Anyway, we're already in a digital economy. But it's just getting... I think the technology is not there yet. It'll be another 3 years or 5 years before they have it. But once they do, I think all industries the government will have its own cryptocurrency. The construction industry will have its own currency, but it won't be, governed, controlled by a bank or by a government.
I believe governments have been broke since about 2008 anyway. And if you look at the euro, if everyone, listening to this takes out a 10 euro or 50 euro or 100 euro out of the wallet and looks at it, where does it say legal tender? It doesn't. All it is just printed pretty paper. Simon, what was that thing we saw during the week that I sent to you too about one of the investment banks, our investors, 30 billion in trouble, 30 billion. Could have sort of an effect around the world as well. So with the way things are and government struggling, and we know what's going on in the States and in Australia and everything as well, people need to start looking at it, investing in something. Tell us, if people want to invest in metals, they want to do more research, they want to look at the company, where can people reach out and find you?
Well, just go to the website, www.strategicmetalsinvest.com.
Okay, and to catch you on LinkedIn as well?
Yeah, on LinkedIn, Louis O'Connor, Strategic Metals Invest.
You're listening to Business Eye on Dublin South FM.